All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, December 27, 2024. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, and subscribe to the channel. Posting multiple videos a day, every day. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, to get into it today, so pretty much kind of a round trip-ish type session here. And market retracing a lot of the move from the 20th. So that big sell, that big drop down on last Friday, and we got a nice retrace today. And if this ends up being a low, it's going to look a lot like every other low this year. So what I mean by that is we had this kind of drop, obviously in April, really nice retrace day there. A lot of people got bearish, and then another one, and we went up here. And then if we look at the August drop, this one was a really good. Everyone got bearish here, and you'll recall if you watch the video here, I said this is actually the best thing that could happen for bulls. But this we had a steep retrace there, right here, a little kind of double bottom, and this one we actually pierced the low. Even had a little retrace there, but it's kind of par for the course for this type of thing to happen. You can see on the cash S&P, we essentially hit a 618, or excuse me, 50% fib. We got to, and we did tag that here. And we came off the lows. I talked about this in the short video this morning. I said this is probably about it for volatility for now. And I had a sell signal on VIX futures, and it did come in pretty nicely. That was on the 4-hour. It did finish off the lows, so they kind of left the door open a little bit here. But finishing well off, well over $1 off the highs of the day. It's holding up all right, though. I'll give the VIX that. And I'll say this, we are wobbling a little bit more frequently than normal, right? So we had this kind of up move here. And you can see where the pivots are, like time-wise. They're about, 6 weeks apart for the most part. And we've kind of got one, like, kind of quicker here. So we are wobbling a little bit. I do think January can be a tricky month. That said, this right here, this is totally normal action. And, we just tested the 50 MA. That's normal bull market stuff. So finishing off the lows here, I think if we can break back to a new level here, we'll just say 6K. It's not really a new level, but I'd say that's the new kind of bull bear line right now. But a break above 6K, especially on a close, I think I think we can get to new all-time highs. I don't know how much past that will go. So right now, I would just say 61.50. I think that's still doable. I think that's reasonable, and that's still kind of the base case. After that, though, things get a little bit tricky. January should be a tricky month. Everybody's kind of worried about yields right now. I think, I've been pretty good at calling, like, turns and yields this year, and I think we might be kind of close to one as well. Like, the hysteria is getting up there. The hoopla is getting up there with the 10-year, and again, this is just a gut feeling here, but I don't think it's going to go too much higher right now. Long term, yeah, it is going to go a lot higher, I think, but in the near term, I don't really think. Excuse me. I don't think it's going to go that much higher. You can see the ZN here. Actually, I like that little double bottom tail candle there from yesterday, right into that pivot from April. And I don't know, it just seems the trade's getting a little one-sided. Nobody's bearish yields. Nobody thinks yields can go down. Everybody's concerned about inflation. We obviously don't really have any data this week to go off, kind of move the needle. But I think once we start getting that, inflation expectations may be embedded a little bit. And so any sort of surprise to the downside could cause yields to really come back in. This is typical, right? I said this, back here, and I said, like, watch out for yields to spike here because everybody's expecting deflation now and disinflation and all this stuff. And we got data that wasn't even that inflationary, and we went back up pretty hard, right? And then now it's started to kind of become embedded again. But again, just some thoughts here. But right now, for S&P, 6K, just leave it at that for now. On the downside, I'd say, I know I've got the ES level already kind of penciled in. Yeah, so that low right there. Yeah, I would just say 58.70 on SPX would be problematic if we were to lose that. So that's really right now. I mean, we could still retrace steeper, and this wouldn't be anything other than a bull retrace, right? You still have the 618 down here. I find it a little strange. They didn't quite get to my 590 level, but they may have just unwound some risk, instead of that. But right now, again, just look at 6K as being the main level to get through. And, if we do that, I think new all-time highs are probably the most likely scenario. The best thing for bulls here is that the Qs, again, just to prove this, again, look at the strength here. I mean, trend line hit, trend line hit, trend line hit. And it's just back testing. Now, this is wobbling less than the spiders, right? Look at intraday. I said this to the training room. I said, I don't think we're going to go much past 520 today. And we didn't. Nice W bottom with a possible V pullback. So, again, this could be the low here. There's evidence to say that could be the case. We'll have to see what happens, Monday. Do they gap us up? Do that. Again, it's another thing we've seen all year long, right? Sell them hard into Friday and then just gap it up Monday and leave everybody holding the bag. They're going to make you hold risk into the weekend. If you want the cookie, you got to stick your hand in the jar, right? And that's kind of what they've been doing. So, and you look at the NQ here, same thing. We just back tested 21.5. Previous all-time high, trend line, we're closing above both. So it's a good bear move. I didn't think we were going to dip this much. I knew VIX 15 would get supported, at least for the short term, but I didn't think we would push this on. Now, is this just another example of people being so eager to short this market? It could be. And this is what I think has been keeping us up all year. It's because everybody's dying for this market to top out. Why? Just keep playing the trend. I don't know why everybody's got to be so obsessed with the top. And, if you call by the way, guys, just so you know, I called the top, and this is on record, back here. This is where I had my members going short, right there, that day exactly. What do I have to show for it besides this silly YouTube channel? Like that nobody watches, going to get 1,000 views, right? You're not going to be Warren Buffett if you call the exact top. You might make some money. Don't get me wrong, you're going to make some money, and you might not though. If you're going all in and you're that emotionally attached to it, you might actually, fumble the bag a little bit. Just keep playing the trend. So don't be swayed by biases and whatnot. I'm just deferring to the trend here. So that's usually what I do. I take shots during cycles periods that I think are going to turn. I look for dealer positioning and I look at technicals. But nobody's gonna crown you the next Warren Buffett. If you're the guy with 100 Twitter followers that calls the top. So I think that's why we keep staying up for as long as we have, because everybody's just dying to short this market. And look, they all pile into puts, VIX spikes, and then it comes right back down because everybody's already, max short. So I would like a blow off to get all those people out so that we can do that, but doesn't always happen. So, but anyways, Q's down 1 1/3, trend line held, support held. IWM couldn't get the squeeze going. You got the close above 225. It's still in the range. I mean, it's not broken. Again, I've said this yesterday, but it's normal. It's taken this longer to get going than the S&P and the Nasdaq has all year. So that's still a level. Above that, I give it the upside bias to 230. We got the Dow down 1/3%, but again, possible higher low in place. If we can break through this area, this should have a nice pop. What was pretty strong today, despite being down, specifically AMD, and we'll talk about this in a second. Hopefully I don't forget, but SMH down 1%. Like, that's not a bad candle, though, at all. Little hammer candle closing above all the moving averages. And this is just smashing on this trend line here. You could... if you want, you could be like, okay, it's actually right there. But I mean, either way, it's not far off of a breakout here. We gap up Monday and pump. I mean, it's going to go to 260 pretty easily. I think same can be said for Nvidia. So 140 above to 150. But AMD, I'm noticing this here, and I pointed out first thing this morning. But certain sectors, certain areas, I think they're starting to get exhausted. And I think we may be getting through some tax loss selling. We'll talk about XLE in a second, but that was up a lot today. Some of these solar plays here, they're really beaten down. Like, they bottomed a lot. Like, TAN bottomed at 10:20, and spiders didn't bottom until like 1 o'clock. Qs didn't bottom until 1 o'clock, Could be noticing that. I think there's some January effect going on, or there could be. So watch those areas, and you guys know I like XLE already. But AMD specifically, I noticed this today. I was like, wow, AMD's showing leadership in a down tape. Not normal, right? Usually AMD shows laggardship in an up tape, or it has since March, right? And today it's holding up. Nice false breakdown there, liquidity grab, back tested support and held up. So watch for those plays that are beaten down and maybe seeing some tax loss selling. This could provide you with some January effect moving forward. IGV again down, but finished off the lows like everything else. Again, hit the 50 MA. Let's not complicate it. Oh, I do want to say this though. All over the weekend, I promise you, and you've probably already seen it, everyone and their mother is going to be talking about that, and they're going to be predicting this head and shoulders here. This is another reason why I'm still kind of bullish here, because I just don't think it's going to play out, because it's on the S&P, and I mean, it's not like people don't see that, and it's not like the algos don't see that too and see people shorting into it. I'll be why the one on NVIDIA didn't play. But you can see it there with IGV. It's valid. Technically, it could trigger. Just for fun, let's do the measured move here. So, not perfect, but it'll take you back. Yeah, it would basically take you back to the breakout. So that would be a healthy retrace. So it could play out. We'll watch it. My guess is it probably doesn't, or it fails, and then it plays out later. Transports here, really at the end of the day closed inside of yesterday's candle. So again, some relative strength there. We talked about interest rates already. The 2-year was flat. It does look like it wants to go higher though. You got a bull inside bar there, and if that goes higher, that will likely be problems for the market. But who knows? It might be postponed for a little bit. XHB down 1.2. Again, I think this sector is still weak. Maybe, I was going to say January effect, but it's still up for the year. So not really. BNQ's down for the year. It's still hanging on to support. I still think this can get a little bit of a retrace. But I don't really like that rejection there, as you know. XLF, again, 49.33. That's still the number there. And then KR is still holding up. I still think that wants to go retest 64. KBE, 58.59. Yeah, broker dealers here. Down today, but nothing terrible. Still up nicely. This is, like I've been saying, though, on borrowed time, though, with this monthly chart. Oil was up today, and it held the gains for once. Again, kind of like a sloppy bull pattern here, but I just don't like how you're just inside of this range. A lot of the time, and I've talked about this plenty of times recently, but we're getting volatility here. But a lot of the time, when you're in a tight range like this for a long time, the first move is often wrong. Especially on oil, right? Right here, we had that tight range there. It tried to break down. It didn't. Tightened up there. It tried to be a bear flag. It didn't. So this is normal. It's normal to see that. I would love to see a liquidity grab down the lower end. I think that would be a huge buy, but we'll see if that happens. But yeah, XLE today, look at this. So, I mean, this was up this morning. And it never really took out the opening range low all day, even though it closed down a penny. Still, look at the spiders, look at the Qs. So relative strength here. We have not seen that in, since like the beginning of the year, really, right? So pay attention to that. The market's talking to us right now. XOP again, double bottom. OIH double bottom. Again, another thing too, before I forget. Speaking of the market talking, if we just compare this with the 10-year, like notice how it's decoupled. Pretty good, pretty good correlation there, right? It has decoupled lately. I don't think that lasts too long. That's why I'm saying volatility is coming in oil or yields, one or the other. But anyway, uranium, DCJ just flat to lower. Again, I've been saying 49.50, but you know, buyers are coming in here, so trying to support it. Last couple of days, it's finished off the lows. NM actually had a pretty decent candle today, and NJ as well. I think one more dip would probably do it. Nat gas, you're down 2%. Look at this move, though. That's on the. Oh, let me just double check. I've been looking at nat gas lately. Ah, okay, yeah, it's rolling, right? So we're on what's Feb? H. I know that's I always forget. Okay. No, it's me. It doesn't matter. It's on. It's going to be rolling here. I forget the Feb number. It doesn't matter. But yeah. So front contract now green. Yeah, we just rolled today. We'll take a look at it shortly. Again, seasonally, it's a little different here. It's a little bit of a change because we've actually rallied into December, which is not normal. But we'll see if it backs off here. I'd say right now 330 is your level. You got a little bit at like 318, 320, and then $3. Again, I haven't traded net gas in a while though, but it's holding up right now. Dollar index still consolidating, still bullish here. I think it needs to do more of it though. And then again, I still like the relative strength out of gold. So I think Q1 can be good for gold potentially. Silver backing off a little bit today. Again, yields up. And by the way, everybody was talking about, the market's crashing today because yields didn't even take out yesterday's high. So just these narratives sometimes are just so funny. Platinum here down 3. Again, outside move. That's also on a new contract day. We've got to adjust these lines. So I did finish back inside of that wedge. These metals are so thin, that's why it's hard to trust them. We'll see what it does tomorrow. It's a new contract day. Palladium looks a little bit tighter. That shouldn't be rolling yet. Yeah. I'd like to see that tighten up more. And then copper here. Volatility's coming in this too. I mean, like this tight range stuff here that doesn't last very long. So if it breaks down, it's going to 390. Cryptos today, you know, kind of quiet. So we're still inside of this box here on Bitcoin. Tail candle low is holding. Yeah, above 100K it can rally. You know, below 91, it's, you know, probably going to retrace. Pretty simple stuff, right? ETH here flat to lower. A little soft. But, you know, overall it's had a nice run here. This is a big base too. Weekly, you know, pretty good outside candle, but you know, the farther out you go time frame wise, the more it just looks like a big base that's being built, to me anyway. Yeah, maybe just another monthly sideways candle. Monthly looks great, actually. Yeah, this is how you clean up the noise. You gotta zoom out. Anyway, so yeah, just look at 6K right now. We'll continue to watch that, and we'll see what we get here. Let me check the futures. Yeah, so they're up just a little bit here in the after hours. So they did come back, retrace back into the zone, and nice pop. So again, I would just give the markets the upside bias for now. This is a standard retrace day. Nothing has changed. Again, maybe wobbling a little bit more than normal, but NQ is still fine. It's still leading. And as long as that's the case, you're usually doing bull market stuff. So just be aware of that. So anyways, guys, I'll wrap it up here. Again, you guys take care. Have a great weekend. Come find me on carnivoretrades.com. I'll see you guys all on Monday.